balances.
All right, so this is Georgette's meeting. I'm just a member.
Okay. So I will officially open the meeting of the audit committee, and we have a full quorum. We have a quorum, so we'll go and introduce ourselves. I'm Georgette Steffens, chair of the audit committee.
David Goodera, board member.
Victoria Storrs, board member.
Kate Hedgeman, executive director and agency counsel.
John Criscone, auditor.
Hal Michaels, CFO.
All right, so last month we met and reviewed the process for the audit, and today we're reviewing the draft of the audit. I know everyone's had a chance to review it, but I will turn it over to you to go through, and if people have questions as we go on.
Sure, yeah. So, as I mentioned in the meeting back in January, as to, the process, I won't get into, too much details there. I think we really went over a lot of the details of what we go through in terms of internal control testing and the amount that we test on your numbers, just because of the amount of transactions that are there. I think we mentioned that we, probably test over, 90% of the revenues and 90% of the expenses on here. So, as well as, confirming all of your cash and investment balances with outside financial institutions. So this report here is a clean opinion, unmodified opinion. We did not have any findings related to internal controls. I don't think we even had any adjusting journal entries here as well, as noted in the post-governance letter to the board. And so yes, again, unmodified opinion. This is pretty much the highest level of assurance that we can express on the financial statements. That's something that the audit committee certainly and the board wants to hear from your auditor. I think the only thing that's, usually what happens is, I gave you the draft a couple weeks ago, but we're, Al's preparation of the Paris report, once that's finalized, that'll get attached here, and then we can put the dates on the report, we can go final and make our submissions. So as to financial results, another great year. I think, 2022, you had a change in net position of an increase of about a little over 800,000. This year was a little over 400,000. Obviously, you got those closings on the projects that you had, Port of Albany, CHPE, which happened last year, Albany County IDA for the current year, which are boosting those administrative fees. Supplemental fees went down. That's 100% of your PSEG fees. Last year there were 242. This year they're only about 140. That's again just relying on the need and available of the. So that's kind of driven year by year. It just fluctuates. Contractual expenses, you had a slight increase. I think the CFO monthly fees were up this year. Based on increases in the monthly fees there, but nothing really changed too drastically. I think the town fee was pretty much the same, and same with the rest of the attorney fees. So again, increase in net position of just over 400,000. Your net assets are your net position is just shy of about 1.7 million as of the end of 2023. I understand 2024, you've got some additional monies coming in from the Port of Albany project. I think 2025 is the final year for that, for monies coming in there. I guess that's kind of all I have to report. Again, no findings. Something that you want to note for the minutes is no material weaknesses, no significant deficiencies in internal controls, and again, clean audit report. So. If anybody has any questions on some of the numbers, or if you see any, typos or changes, or any other questions on like the MD&A section, or budget versus actual section, notes of the financial statements.
So I did a question on page 8, where it talks about cash flows and operating activities. So I guess I just didn't, as a non-accountant, understand what adjustments to reconcile operating income to net cash. Like, what does that mean, and what are those, the 19,619 and the teach people like where those come from.
So this is really just an increase or decrease in your account receivable, prepaid expenses, and accrued liabilities. And it's merely just taking a difference of what's on the statement of net position. So, for example, on page 6, your accrued liabilities went up $9,254. So that's an increase in cash technically. This is really like the direct method of presenting. 99% of the time, with some of our like nonprofits or corporate clients, we see the indirect method where, you kind of start off with your net income and kind of go down the line, increases and decreases in your assets and liabilities, and then you end up with your net ending cash. Here, it's just we have to have this reconciling item. So that $422,739, flows up to the top. Then you have your interest income, your total net increase in cash, and the cash at the end of the year pretty much mirrors, the cash that's sitting on page 6.
The only other comment I had or question, and I guess this may be for you and for the committee, is I wondered if, on page 10 of the notes, where we talk about net position, it seems like we talk about a policy for operating reserves. And I wondered if we should actually have a board designated spot for our cash. And I don't know, so coming from me where everyone looks and goes, oh my gosh, you have all this money. Well, no, it's already it's designated. So while it looks like we have 1.6, we really only have one, because 600,000 is designated for what activities. And so I also wonder too about the $100,000 for economic development, because year over year we've been carrying it, and the board has already designated that money for the projects. And so we keep on carrying it year over year. I wondered if that would be another board designated, and if there was interest in sort of showing it that way as sort of operating reserves board designated and the economic development board designated. Just a thought.
Yeah, that's a good question. I mean, the board designated, it doesn't necessarily mean it's restricted. It still falls under that unrestricted category. So it would just be kind of something that would be broken out that way on the face of page 6 here, and then also just be kind of described in the footnotes of still, what the designations are for. And, but yeah, that's totally a board, decision and a board approval process to see, what amount you want to designate and for what purpose.
Like if people do sort of look at us to see like how much money they can get from us, which
We usually don't have that problem.
Yeah.
Oh, you don't?
Well, not for a long time.
Yeah, what happened, actually, we used to have a net position policy of 450,000.
Right.
About 3 years, we looked at it and said, all right, no, nothing happens for 3 years.
Yeah.
We'll spend 150, 150, 150. So that was it. And then we had a couple of years where nothing really happened, and we had to tweak the policy down to 200. Now, looking at it, we could go a decade. But it's just still the policy. We want to at least have 300 net position, so that we couldn't, theoretically this year somebody came in with an opportunity for us that $1.4 million, and we couldn't just say, well, yeah, let's write that, because we'd have to have 300 at the end of the year based on. But yeah, we can designate.
Yeah, that is you're raising a good point, because we do have a policy, a fund balance policy, that's tagged to expected operations for a few years. Probably Finance Committee can revisit that. We had lowered it when, I think in 2020, when everything ground to a halt and we really didn't know what was going to happen. But Finance Committee can take that up again and maybe have a first pass at whether we want board action to call it restricted in some way. Although we'd have to think about, if you restrict it, then how do you get it back out for operating expenses if you do need it? So
I know Mr. Kotlow is not in favor of that.
The board designation.
Yeah.
Yeah.
So I just mentioned that, but I don't even know if I'm in favor of it, but it's not my. I think we have PSEG that's going to come to be redone, so there's going to be fees off of that. So I almost Yeah, I mean, I almost want to take a wait and see with that before we kind of, because then that's a lot.
Right, but then,
Mhm.
Then it might make sense
this-
and,
when we did this a couple of years ago, PSG was gonna run out.
right,
And we had no crystal ball that said,
Mhm.
well, they might just decide to
Right.
come back to the, and, yeah, things change. I mean, who knows 6 months from now, what could be going on?
You also, every year in the audit, the board has the right to justify and change anything that is board designated, right? If the board designates it, the board can change it.
Yeah.
You know, so every year I sort of, when I do our audit, we go through, we have a 3 or 6 month operating reserves and we justify sort of why, what we think those costs would be. And so you have the ability, as long as the board votes on it, to change it. I mean, I'm not saying we have to, I think it's just something we should consider, especially with the $100,000 for the economic development that's rolled over year. I mean, this year it will get spent. But I think if we identify very specific projects, we should
Yep.
sort of show that in our audit that money has been, I mean, it's in our budget, but in the audit it should maybe be shown as money's committed to specific projects.
So, for example, if we'd entered into a contract with CPL last year, is that the kind of thing you're talking about, where we'd entered into a $75,000 contract for services, but money hadn't been paid out, then the audit would show that?
Or I think it's more like the board says, hey, we're gonna take a bucket of, let's say, $200,000 for economic development. We're not sure how we're gonna spend it. It would be board designated economic development. And then as you spend off of that $200,000, it would decrease each year in the audit, but it's, it pulls it out from that big number we have and shows that this is, you know, sort of separate. You know, we don't have to do it. We do sort of show it in the budget as well. But I do think it's, especially if it's multiple years and not just, hey, we're gonna spend it in 1 year.
Mhm.
Like we're thinking about.
Yeah, I mean, we are seeing a fund balance and, you know, there are IDAs in the state, especially at the county level, that have millions, if not tens of millions. And part of the problem is that our spending is restricted so much by state law that there are many, many things we can't do. This is the first time that, it may be the first time that Bethlehem has had these kinds of balances. We do have what I would call a good understanding with the town right now, that our spending is very restricted by state law. And it can't come to us and ask for things that aren't permitted under state law. And they've really digested that, and that's been a good protection against where they see a budget constraint and in the general fund, and they see that we've got this.
there's a great AG opinion to
So
back
that-
us up.
So that, I think, Georgette, you're talking about a kind of risk of having this kind of money, and that's a really good point.
There's nothing wrong with having, I get this question a lot from my nonprofits is, you know, how much is too much? And I said, it's great. I mean, you're lucky that you're in this position. And other organizations that they're in the red, and that's you know, then you're talking about going concern issues, and that's not the presentation that I want to, you know, give to a board. But yeah, I mean, I understand your point. You know, it wouldn't necessarily be designated for normal operating expenses. I think the only expense that might fluctuate is, you know, the fee to the town, for example. But you're right, if there's a certain project or something that you want, it's like an economic development, something that's, you know, outside of the ordinary scope, then, you know, certainly that would be an option, you know, to do that. But that's, you know, again, that's your, you know,
Yeah.
your decision.
We'll wait for Dick to weigh in. I'm sure he has very specific opinion. The only other question I had was about, I don't honestly know what all our legal stuff is and what we're involved in and what we're not. But is there any financial liability, and should that be recognized here for the lawsuits? Like we're only in one. I didn't know if in the audit, we should note the risk of the lawsuits.
They haven't alleged any damages, monetary damages, so I think we're all kind of
Okay,
like wondering, you know,
what are they even saying?
yeah.
Okay.
I
And
mean,
so there's no financial risk to us currently in the current lawsuit?
For us in particular, no. Because we just gave the sales tax letter. You know what I mean? Like, it's a very different cause of action than against the port itself.
Yeah.
And the project and maybe value to homes and things like that. I don't think they can get us on that. I think the only thing they could say is, you gotta take your sales tax letter back, or, and you haven't even used it.
Right.
You know what I mean?
Yeah.
So I don't, the litigation's out there, but I just don't, I couldn't even quantify it if I wanted to, I guess is my,
That's what it is. If,
Yeah.
I mean, as of the date of the audit report, which is essentially the date, probably today, when give me back the representation letter, date that, is it quantifiable? And if the likelihood is remote, then you normally wouldn't put it in a subsequent event or a contingency type footnote.
Yeah.
But that's a good point. I mean, but if there's really, we could put a general footnote in there, but then again, it wouldn't have any dollar amount. It would just be like a general kind of footnote, just to, cover yourself, but yeah, if there's nothing specific that could
There's
be
no financial
quantifiable, then
liability or risk,
Yeah.
then it doesn't need to be included. Those are my only questions.
Yeah, under the Paris report, I'm about 97. I've got all the calculation, everything. I'm just waiting on one or two more responses for the projects. And might have to talk about our favorite grocery store, how we report that. ShopRite. I haven't got any response, but I think at the end of the year, they didn't have any jobs. But I think this is also the last year of the project, so.
yes, actually, John Taylor and I have a meeting with the landlord next week,
Oh, that would be.
or tomorrow,
Oh.
tomorrow.
That's even better.
So, yeah, I can find
Yeah,
out.
'cause,
You want to email me the form too? So, okay, I'll bring it up.
There you go.
I have one small thing on the first page of the MD&A. Under financial highlights, the second bullet, expenses increased by 16,484 compared to 2022 due to engaging agency counsel through a contract instead of as a municipal employee. Kate's been engaged through a contract since 2021. So that bullet should be eliminated, or I don't have the budget comparison between 2022 and 23 here, but under our budget, is 16,484 large enough that it would be important to explain the change?
Yeah, and again, this is a report that we don't necessarily opine on, so it's really your decision as to whether you want to strike that from the record. I think 16,000 compared to our scope that we use for our audit is pretty, a significant number. It's really just an informative thing to say, why something would increase or decrease.
The revenue decrease was noticeable. That's only because we had a better year to year. But the revenue, our expenses are always 150,000 plus or minus 10, no matter what we do. Except this year, we're going to actually spend some good money on it.
I would be fine with
Removing the.
removing it. Yeah, that's fine.
Especially when you start the paragraph with a 416 increase, right? Does anyone else have any other questions or suggestions?
That's fine.
So, Kate, do we have to do an official resolution to bring the draft with the recommended changes to the
Usually we
board?
don't, not in this
Just
meeting.
goes to the board.
Yeah, we just, send it to the board.
Okay.
And
We'll go to the board and would say, that you liked it, and the board will hopefully like it.
Well, so no findings is wonderful.
Yeah.
No statements, all that stuff is great, so thank you.
It helps to have we don't have a lot of activity that group, there's not a lot of judgmental things. We've got cash in the bank, we write checks, there's not a lot of crazy things going on that could bite you.
So usually our treasurer is here. He wasn't able to attend meetings this morning. So what I don't know, and Georgette, you may well know, is the representations letter is supposed to be signed by him. I don't know if that was something he already signed at the
Oh, yeah.
beginning of the audit.
Yeah.
Okay.
Is it, okay.
Oh,
Yeah.
yeah. I think.
I think, because he
The
sent me a
engagement
copy.
letter or the management representation letter?
Oh,
Because
he
the
probably
management-
signed the engagement.
Yeah, it's probably the engagement
Okay,
letter, so,
this one.
okay.
Yeah.
Yep, that's the management rep letter, so this
Okay.
comes along with the draft. Yeah.
Okay.
Oh, is that stuff? I thought I had Alice for some reason, but yeah. that's
So
fine.
that
Do you
needs to be
want him
signed.
to?
Yeah, so he
Okay.
would, and if he wants to, like, usually like, I would have him date it today, the date of our meeting that, we kind of review the draft and
Okay.
everything looks good. And then, what I can do is throw all the dates. I don't know if you noticed that the reports don't have any dates on them, so,
Right.
Mhm.
we can actually officially report the date as of today, once the parish report comes in. And then that final package, I'll make a final PDF send it to Al, give that to the board, as part of the package for the March meeting.
Well, once again, that's the old chicken and egg thing. The board will get a parish report that says not submitted, because at March, they'll then say to me, hey, submit it.
Yeah.
And then within a half hour of the end of the meeting, I'll do my office frantic and clicking, and then we'll print the clean thing that says certified, and we'll send you that for attaching to our bound copies, the bound copies we get. That last week of March, I think probably every agency in the state is on the parish system. Sometimes it gets a little wonky.
Gets a little full. bogged
So
down.
I'll have
It's
Dick
so much
sign
better
that
than
when
it
he's
was.
able.
Sure. Yeah, you can
Okay.
just email
No,
it to me, doesn't need the,
It's just the software.
Yep.
Yeah.
And we'll ask members how many bound copies,
Yeah.
because I need a bound
It's
copy.
awesome.
yeah, you need the paper,
So
I understand.
nice, so nice.
That's no problem.
Even for reporting, for being an authority, it saves all your information.
Okay.
Okay, so we will, with those minor changes, we'll then have Al, you'll send out the final draft to the board.
Yep.
And then we'll review it and adopt it at the March board meeting. So with no other business, I'll take a motion to adjourn.
So moved.
Second?
Second.
First and second. All in favor?
Aye.
Aye.